All right, so Fritz, if you don't mind, I want to go back to the quarter. Big metric for you is your operating ratio. It's an efficiency metric, so the lower the better. It increased quite significantly year over year. Last year was 8.33. This year, 87.8. What does that signify about the less than truckload business?
Well, I think it's a little bit about the SAIA story specifically. Last year, we were in the midst of an organic expansion. We added 21 facilities. And, those are investments that we put in place for the long term. So we see the expense headwinds and the related sort of inefficiencies of those openings. I think is what really significant for us is our performance from Q1 to Q2 of this year, where we saw sequential efficiencies across our network. And so we saw a significant improvement. The OR in Q1 is right around 91, and we posted the 87.8 in the second quarter, which is a significant change for us, and that's a positive trend. And I think it bodes well for our success going forward.
All right. A lot of companies in the LTL space, they were buying terminals to expand their operations, some of them after the collapse of Yellow. I don't remember if you were one of those, but I do want to ask you, what are your customers, and we mentioned them earlier, customers like Walmart, Starbucks, Dell, what are they saying to you about their needs going forward, especially after the passing of the Trump spending and tax bill that's supposed to boost CapEx spending? And also, a lot of these companies could potentially benefit from, quote unquote, bonus depreciation.
Yeah, I think what you'll see now is that as we've kind of progressed through the year, a fair amount of the uncertainty has gone away. Part of it was the passing of the recent bill through Congress. That's important. People understand now what the tax code means, what that means for investments going forward. That takes a bit of the uncertainty out. I think some of the recent tariff agreements takes a little bit of the uncertainty out. So I think as our customers look through the balance of this year into next, I don't know that they're necessarily positive yet, but the uncertainty has gone away. So I think it's a step-along process here where we continue to see some improvements through the balance of the year into next year.
Can I ask you a broad question? Are we still in a freight recession? I'm looking at your numbers. Your revenue per shipment increased almost 3% year over year. And then at the same time, we're seeing rail consolidation with Union Pacific and Norfolk Southern. What's going on with pricing? What's going on with volumes? And does rail consolidation, does it impact your business?
I don't think rail consolidation necessarily impacts us directly, but I think across the broader freight complex, it certainly does. I think specifically what you see in our business and others is that the underlying costs of the business are inflationary. So I think you see an emphasis on making sure that we can recoup those costs because our customers require significant investments to support their businesses and their growth. So I think you see that sort of, although the market is in a bit of an ongoing freight recession, I think generally speaking, specifically in the LTL business, you see very much of a focus on getting a return on the capital that is required to run a very capital-intensive business.